What's up everybody? Welcome to the Stocks channel. My name is Corey and today in the stock market we had a mixed bag with most of the indices going up but the NASDAQ 100 going sideways. Are we getting ready to finally see a pullback? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today in SPY we were up about 0.5% and we're getting extremely close to that very critical resistance level at SPY 453, and the exact level is right around 453.5. So get ready for this rally to be stalling very soon, and I do think we're going to see a significant pullback. We've gone over this many times before and I'll just go over it very quickly. The reason this rally has been so impulsive is because there was just way too much bearish sentiment and way too many people shorting the market, and you were basically getting a short squeeze rally mixed in with a lot of momentum trading, and now we're starting to get a lot of FOMO. You can tell we're starting to get FOMO because the volume is dying off. Many disciplined traders and big money are getting ready to start locking in some profits, and we are going to see a little bit of turbulence. Now that's not bearish. Just because we're due for a pullback doesn't mean we're going to snap out of this recent bull trend and go right back into a bear market. But I will caution you that this is not a confirmed bull market until we either see that successful retest during the pullback and come back out and take out the highs, or see price action closing above SPY 458. I think we're going to see both around the same time, meaning we'll pull back before we get the breakout, and then we'll get the breakout on the next attempt to come back up to resistance, and we'll see SPY breaking above 458, and then we are very likely going to be well on our way to new all-time highs in the summer. However, you cannot assume it's going to happen. You have to see it happening in the price action to get confirmation. So right now we are very clearly getting that bullish price action, and we are blasting through a lot of key resistance, and you can clearly see we are developing a bull trend. All of these moving averages are now positively sloping, and our 20 simple moving average is going to be a very critical retest. So the highest probability chance, in my opinion, is a pullback that comes all the way back down to the 20 simple moving average. But you do need to understand it is a positively sloping simple moving average, so it will be a moving target. So if SPY continues to go up or starts to go sideways, it won't need as deep as a pullback to test that level. But right now, if we did get a sharp decline, you're looking for a retest of at least about 438 to about 435. If we go lower than that, we are still bullish as long as SPY is above 428. But if we start to see SPY breaking below 428, then we are very likely going to see this becoming a bull trap, which means we're coming back down to retest the lows at 416. And if we break those levels, you are looking for that gap close at 400. So in the short term, you have to be bullish because the short term trend is bullish. And in the medium term, if we get the successful retest and bounce off support, come back up here and blast through 458, then you can start to expect to see a bullish rally that can last multiple months. So for the time being, you need to be cautious in the near term for the pullback, so look for very critical resistance around 453.5 and then 458. To the downside, we will have support on the way lower right around 446 and 442, and the most critical support levels will be right around 438 to 435. So watch those levels, and I do expect it to be a multi-day pullback, not just one of these one red days and start going higher and you miss the pullback if you didn't buy that dip. That's just not realistic. We are going to see a multi-day pullback. The question right now is, where are we going to find the top in the pivot for the high before we see that pullback? And I do think it's coming very soon. So going into next week, only expect to see just a little bit more upside before we start that multi-day pullback. So I do expect to see the majority of next week being a lot more red than we saw the last couple of weeks, because we didn't actually see any red the last couple of weeks. Jumping over to the NASDAQ 100 triple Qs, you can see we were very flat on the day, and the triple Qs is starting to run into critical resistance now, right around 360 to 361. Just like SPY, we can go a little bit higher to about 363, but the most critical resistance breakout will be 367. And just like SPY, I don't expect to see that breakout without a significant pullback. So you can see we've basically gone up in a straight line with very minor dips along the way. So we're getting bullish breakouts in price action, but we don't have the market structure that says we're going back into a bull market. We're coming off of a brand new low with no significant pullback, and this is just not a sustainable rally. We need to see that successful retest of the breakout and then come back out here and blast through 367. So the critical support levels on the triple Qs will be right around 347 and 341. And I do think it's possible we come all the way down to 334 before we find the bottom of this pullback and then attempt to break out into a bull market. So watch those three very critical support levels, and you will have support on the way lower right around 352 to 351 as well. Now, if at any point we see the triple Qs breaking down below 334, you need to be a lot more cautious that this was a bull trap and we're going down to close that gap at 315. But that will be a long ways away before we know this is a breakdown because we do have so much critical support above those levels. Now, the bullish breakouts from here will be the close above 367, and I do think we have a valid price target all the way up here at 377, but I don't think we're going to hit that price target until we get the pullback. So on the triple Qs, I will say I think we're heading to 377, but I do expect to see that pullback to at least about 341 before we get there. Just like on SPY, you can see the volume is starting to drop off. So if we start to see that pullback in some higher volume selling, you'll want to watch these very critical support levels very closely. On the Dow Jones, we were up 0.43% today, and we did see another bullish breakout in the Dow Jones, closing at a brand new daily high from the lows that we're bouncing from. So that is by far going to be a bullish development in price action, especially because we did look like we successfully retested the 50 EMA. So you can see the Dow Jones is looking very bullish, but I do think this rally will stall out right around 350. And from there, I'm expecting to see the Dow Jones coming back down to about 340 before we get that bounce and breakout above 350, breakout above 356, and close the gap at 360. So you're starting to see a common theme across the indices that I'm expecting to see just a little bit more upside going into early next week. That should be the final stretch to get the last bit of FOMO in. And then I'm expecting to see a multi-day pullback, come back down to critical support to test the breakouts, and then bounce up, come take out these highs, and then start into another bull rally. So if you watch this price action and you're patient and disciplined, you should know exactly how to set up your trades going into next week. And if you don't think a pullback is coming and you think we're just going straight up to all-time highs, well then I guess you will at least learn something from this process and you'll know what to do next time around. So in the Dow Jones, look for that critical resistance at 350 because that will be the bullish breakout with strong support right around 344, 340, and 338. In the Russell 2000 IWM ETF, we were very flat on the day, only going up 0.14%. But again, you can see a lot of very bullish developments with the bullish breakout, and it does look like we're successfully testing that breakout. So in the small caps, I do think it's possible we come down to about 201. But if we lose that support, don't forget about the possibility that we come all the way down to close the gap at 195.7, and we still will have support at 197. So from here, in order to expect more upside, you need to see a close above 207.5 and a breakout above 212. And then we're very likely done with the pullback and we can start running up here to close that gap around 228. So look for a potential of that pullback going into next week and watch all of these downside critical support levels. On the Arkk ETF, we were down 2.85% today, and we did come back down to test the support level right around 63.4, and so far that level is still holding up. I think it's more than likely that we come back down to 62, break down through that level, and come down to close the gap at 54.7 because we are coming out of a bear market, and I don't expect to see this gap holding up before we go higher. The bullish breakout will be a close above 71, so don't get bullish on the Arkk ETF until it closes above 71. Unless this gap closes, it's very likely we're trending down towards that level before we get the bullish breakout. Once we break above 71, the next bullish breakout will be a close above 78, and then we could start to develop a bull trend in this ETF. On the VIX, we were down just over 4%, and the VIX is very close to closing back below 20, which is going to be a bullish development, and it's more than likely going to tell us that we're going back into a bull market. But don't just expect the VIX to close below 20, we need to actually see it, because the last time we got down to the VIX level of 20, we saw another huge spike in volatility. I'm not saying that's guaranteed to happen again, but since we are due for a pullback, we could get a bounce off of that support level, see the VIX bouncing back up to retest 24. That will be our pullback, and that will be a buy the dip scenario as long as the VIX doesn't spike out back above 24. If you see the VIX getting back above 24, be very cautious because it could be heading back up to the 30s, which means we could be going down for another leg lower, and this was all a bull trap. So overall, I do think this is an extremely bullish development, and we'll have confirmation once the VIX is below 20. On Bitcoin, we're currently trading just below that resistance level at 45,000, and you can see we did try to get that bullish breakout. Overall, I do think we're going to get that bullish breakout because, as I've told you in the past, I do think this is a double bottom with a successful breakout with a price target just above at 46,000. And when we get to that price target, we're going to have a successful breakout of the bigger double bottom with a breakout above the neckline at 45,000, which should take us all the way up here to about 51,000. So Bitcoin is looking very bullish, especially above this level at 41,000. So as long as Bitcoin is above 41,000, you need to stay bullish. If we break below 41,000, you can get a lot more cautious because we could come back down and test that support at 37,000. On NVIDIA stock, we were down 1.63% today, and we see NVIDIA still struggling around this resistance zone right around 279, but we have had a very impulsive rally. So just like in the indices, it's likely we're due for a pullback, and the most likely area to pull back to in NVIDIA will be 267, 256, and right around 250. If we break below 250, it's still possible we come back down to 244 or fully close the gap at 230. As long as we stay above support at 230 or stay above the 50 EMA, I do think this is still a bullish setup. So you're either looking for a shallow pullback to about 256 or a deeper pullback to about 244 to 230. Your next bullish breakout will be a close above 279 with price targets at 293 and 309 above that. On Tesla stock, we were down 0.32% today, but we continue to see Tesla looking extremely bullish. It looks like a very strong impulsive push through that resistance at 996, and we've now turned that level into support with 3 closes above that level, and it does look like we're starting to bull flag above that support. So from here, Tesla could cool off and continue to trade sideways and potentially even come all the way back down to retest the breakout at 937. As long as these support levels at 937 and 900 hold up, this is a very bullish setup, and I do think it's possible we see Tesla trading at 1108 in the very near future. Above 1108, we're retesting the all-time highs right around 1200, so watch for the bullish breakouts above 1065 and 1108. On Apple stock, we were up 0.37% today, and we continue to see Apple defying all odds, continuing to go up day after day, and this is not a sustainable rally. More than likely, we saw the top in Apple before the pullback today, but if we do get one more green day, you're looking for this rally to stall out right around 176. I don't think there's any possibility that Apple just blasts through 176 without any significant pullback. So from here, expect to see Apple pulling all the way back down to retest the breakout at 168 and possibly even going all the way down to about 165. I don't think this is a healthy rally. It's getting way too vertical and way too overbought. Even though this is a very bullish looking chart, there's no way this rally is sustainable. So watch for that pullback to 168 to 165, and on the way there, we will have support right around 170. So the next bullish breakout will be a close above 176, and I do have that price target all the way up there at 188, which I do think we're going to see in the near term. So above 176, look for resistance at 182 with the price target up there at 188, which is achievable by earnings. On the financial sector, we were up 1.28% today, and we continue to see bullish price action as we develop the bull trend, but if we come back down below the 50 EMA, you're looking for the gap close at 37.5. On the industrial sector, we're up 0.62% today with bullish price action in a bull trend, so it's very likely that we're coming up here to close this gap at 106 in the very near future. On the healthcare sector, we're up 0.46% today, confirming the full bull trend with today's price action, so look for the bullish breakout and going up here to close the gap at 141, and that is going to happen very quickly. On the energy sector, we are up 2.19% today, and we see the energy sector getting another bullish breakout, closing at another 52-week high and still holding on to the bull trend. Remember, you can't get bearish on the energy sector until we lose the support trend line. So jumping back over to the S&P 500, this has been a very bullish last couple of weeks, and we're getting very close to seeing the end of this rally before we get that pullback. I know a lot of you are getting FOMO, and a lot of you got short squeezed because you were getting way too bearish at those lows, but learn something from it and just move on and make sure that you don't make that mistake again in the future. Remember that when everybody is getting bearish, that is usually an indication that a very important market bottom is being put in, and that is usually a good indication that there is going to be a very large short squeeze when everybody is closing out those short positions. So that is now in the past, and I think that short squeeze rally is coming to an end. So get ready for a prolonged pullback that could be very deep, which is going to punish all of the people that FOMO'd in, and it's going to create max pain for all of the people that just covered their short positions for a loss as we go all the way back down to where we came from. So this could be a very deep retracement, and it could more than likely be a bear trap before we go into a bull run for the summer. You can't rule out the possibility this is a bull trap as well, so if you see high volume selling and we slice through all of those critical support levels that I gave you, be a lot more cautious and also watch the VIX if it breaks above 24. Also, don't forget that I have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends all of your buy and sell alerts directly via email and text message. With all of this market volatility, I think now is the best time to be a bank member. You can find out all of the information about Bank Trade Alerts and learn how to subscribe by clicking on the link in the description of the video. I also have the Stocks Channel Discord where I do intraday updates and analysis and bring new trade ideas to you weekly. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market, And as always, I will see you in the next episode.